Hello, everybody, and happy Thursday. Welcome to the Gold Rush live stream. As always, I am Sam Gatlin, an editor at All Star Charts Gold Rush, joined by my better half, Mr. Jason Pers. And I want to give a shout out to our producer, Mr. Gene Gote, fighting through an illness. He is sicker than a dog right now, but he wanted to be here so we could go live and talk to all of you. So shout out, Gene, for making this happen. We appreciate you as always. And Jason,
Absolutely.
we're here to talk about the huge moves we're seeing right now in commodities and in particular precious metals. I don't know if any of you gamers at home are watching the AG, maybe the blue chip silver miner, if you will. That's a darling for all of the traders who want exposure to the price of silver via the equities market. But go ahead and look at that ripper of a candlestick in AG today. I mean, wow, you are seeing everything work in precious metals right now, Jason.
I think that the whole precious metal space is just kind of really picking up. And, you and I have talked about it a bunch, which it's a good time to get junky. Get in that stuff that's, you really don't want to buy in that space because you're like, that's probably a really bad name. And it only goes up during precious metals bull markets. And this is the time that it is going to go up. Like, that's the biggest thing, like, I keep thinking about right now, which is I want to own the crap in the precious metal space. Like, and that's not my normal go-to as a trader. Like I'm large ETFs, futures. That's my wheelhouse. That's what I usually trade. But when there's a precious metals bull market, we want to keep moving down the cap scale, getting into smaller names, smaller market cap, and names that are people just kind of like we said before, people just standing next to holes in the ground telling you need to buy this right now or you're an idiot. Um, Now, once again, it's not saying I'm not saying, hey, you want to own those for the next 20 years and just sit on your hands. I'm saying as traders, that's where the money's going to be made. And I think a lot of the money's getting made right now in that area, and we're starting to see it pick up. And we talked about this too as well, Sam, which is anything with silver in the name will probably go up, and that's true. Like everything with silver in the name is now going up and starting to move. Like I think silver is probably heading to 50 pretty quickly. I could go down the list. Let's
We have the charts, Jason. Don't spoil it
let's go.
all.
Let's go through these charts before I just start going nuts and going everywhere.
All right. Chart number one, Gene, we've got the iShares 20 plus year T bond ETF, TLT. And man, this just is a testament to the power of technical analysis. We drew these two magic lines, and then as soon as the price got to the apex, you've seen this huge move over the last few trading sessions. Let me pull up my chart because it was like, yeah, so on Thursday, September 4th, you got that breakaway gap. And then on September 5th, you got another gap. It was just like a bang, bang. And that was like it's a classic like momentum thrust, if you will. You see that at the beginning of trends. You see those powerful breakaway gaps followed by another strong session. And since then, you've just seen continuation higher. So seems like there's a strong underlying bid for bonds right now. I know, Jason, you've been one of the biggest bond bears on Wall Street over the last few years. So, do you want to hate on this chart or do you want to be a buyer of this chart?
I don't want to be a buyer yet, Sam. I mean, for me, it's a bunch of things. I'm a bond bear because bonds are in a bear market. And if that changed, let's say we get back up and over 102, sure. But I was just telling Sam this story. Basically, since 2020, you started to get this massive downtrend in bonds. You had the blow off top that happened in March 2020, went sideways for a little while, and then broke down and really accelerated all the way to where we're at today. And looking at that market, like it was something that we just stayed short that whole time. Like I was short literally that entire time. There was one whipsaw that happened. I think that was like late 21. And then, but nothing was ever along. And we continued to be short after that all the way up until in 2024, we hit a 52-week high in TLT. So, and it happened in all the bonds, whether I was in three, because in futures you can be in all the bonds, 3 month bonds, all the way to 30-year bonds. They were all giving me long signals. So then I change all my positions and I finally go long bonds because, I'm not going to fight price. And then what happened? It fell back on its face. Now, once again, I'm not going to fight price, but I can still have the underlying view that any rallies in bonds will be short lived. It's not something that I want to tell people, hey, in your retirement account, you can own this for 40 years and you're going to make money like it was back in, the 80s or 90s or 2000s. Like this is something that all these rallies will be very short lived. If you're a trader, you want to trade here, try to get to the top of the range. I have no problem with that. But if you're really looking for this to like trend and like this is the buying opportunity of a lifetime, bonds don't work like that. It's not something where it's like, hey, it's in the S&P 500, it's diversified where you have the largest weightings leading the way every single cycle. It's bonds. It's really related to inflation and growth. And with inflation being so sticky under the surface, and at any point the Fed is starting to ease, and then the globe will start to ease as well. So global rates will start to go down. Monetary policy isn't even that tight right now. So add that into this whole equation, and I would be so surprised to see bonds just stage a rally here, get back over 110, 120, and just, have the bottom. Now, once again, I will completely admit this. Markets love to fool people, which is why at the end of the day, I will always follow the price. If the price starts to get above 102, I'm going to change my opinion. I'm going to say something different. The price here, though, no, it's gonna have to show me a whole lot more for me to get very bullish on the bond space. But we could see this carving out a base. If this carved out a base and we really got over 102 and it was sustainable, like, I'd change my mind. But look at the market. What's the market saying? If we look at gold, massive rally in gold. Gold is moving like crazy. Look at gold miners, they're moving like crazy. Silver's moving, silver miners. That's usually a sign of inflation is coming, and probably in a big way. And then if you go to copper, yeah, copper in the United States doesn't look that great, but if you look globally, copper looks fine. If you look at the international mining stocks in copper, they look even better. Even the US mining stocks in copper don't look bad. COPEX is hitting a new 52-week high. So we have a lot of things to be very bullish about in that space. And then we get into, what everybody points to, which is energy. Energy hasn't gone anywhere. Therefore, bonds and deflation is going to come back. Energy is one of those trades. Like if you think about it like 2020, and I was thinking about this today, Sam, when we were all talking. 2020, you have the XLE makes that double bottom, basically right before the US election. And then you have that big gap up out of it. So what before that did gold do? Gold rallied right off the March lows in 2020 and didn't really look back until August in 2020. What happened with copper? Well, copper was actually bottomed out in March 2020 as well and continued to move. And then oil finally caught up at the end. I think oil is going to probably make a big move at some point. I'm not ready to just go buy it. I want to see it make that move and then enter, just similar to the way I did it back in 2020, where we had that double bottom. We gapped 15%, I think, off that double bottom. And I bought there, and everybody in the world was like, that's stupid. It's already made its move. It can't move anymore. And then oil didn't look back for another 2 years. So that's what I'm looking at. That's going to probably put a lot of pressure on bonds. Globally, the dollar's moving down. International stocks look good. I could connect all these things to bonds and probably go on a whole rant for this entire show, but I'm going to move on there. Just saying, not very bullish on bonds still. I still keep hearing, and people keep putting in my comments too, Sam. They keep saying, hey, the mainstream media all thinks the way you do. You got to get off the mainstream media. And I'm like, I haven't seen anybody in the mainstream media say 30 years going to hit new highs besides Sam and I. Like, that's it. Like, there's a possibility of the 30-year hitting new highs, and that's just Sam and I talking about it. Nobody else is. Everybody's looking at lower rates from the Fed, which is going to put pressure on the 30-year and so on. I'm differentiating and saying I still think the 30-year is probably headed higher. I don't know when that happens. I don't know if we go up in TLT first and then down in TLT later, but I'm still bearish on bonds.
And I think it goes to the global macro environment that we're in, Jason. Like we've been watching the global 30-year yield, not just this last year, but this entire cycle, and it's kept us on the right side of the trend. And right now, if you look around the world, a lot of these countries have their 30-year yield breaking out to new cycle highs. I mean, look at Japan, for goodness sake. I mean, what a face ripper you've seen recently. So the US could be the only country in the world to have the 30-year yield roll over. You know, like that certainly could happen, but that's not really the bet that I want to make.
No. And that's where I'm at. And it's not because it, and one, it doesn't matter much to the thesis, right? Because that's the biggest thing, like I'm thinking about. Um, if you look at bonds and you say, let's say TLT starts going up here and we're long gold and gold miners and silver, that's going to be really good for those. So that's only going to take us up a little bit higher. So I do think that that's something that we should continue to pay attention to either way. I think gold's the winner either way. Gold will win. TLT goes up, TLT goes down, gold's a winner.
Mr. Market's telling us gold is the winner loud and clear,
Yeah.
Jason.
TLT goes down, though, I think it starts to broaden into different things. And that's kind of the thing to pay attention to. You see TLT roll over, you'll probably see it broaden into the energy space finally.
So this next chart you brought along, Jason. So in the blue line we have the S&P 500, and in the gold line you have gold futures. So what is this chart telling us? I see two parabolic uptrends, really. You didn't log your scale, Jason. What's
No,
going
no,
on?
no, no need to log it. This is all for the return, Sam. This is all for the return.
Gotcha.
So people
Gotcha.
always would point to me like if you pointed to like when we really started to do easing policies in the United States, that was 1998. You had the hedge fund blow up on Wall Street, basically almost destroyed Wall Street. Wall Street had to bail them out. And basically, the Fed started easing pretty heavily at that point, not to mention the dot-com bubble happened right after that, 9/11 as well. Started seeing a lot of easing in the market. So I would always chart gold to, 2000, just an easy, even number. And people would go, oh, that's a bad time to do that. Obviously, gold outperformed at that point. You need to
You're
aim.
cherry picking,
You're
Jason.
cherry picking. Yeah. So, I said, okay, one of these years, maybe it'll be different. So cherry picking now all the way back to 1971. If you guys out there in the chat, definitely let me know what happened in 1971 if you can remember. Not even remember, but look it up. Go ahead. But from 1971 moving forward, gold has now outperformed the S&P 500. So that's with all the crashes in gold, all the crashes in the S&P. There's no cherry picking. Basically, that's the dollar getting off the gold standard. That's the answer to the question.
Hey, you didn't give him a chance to look it up.
They should have known it already, Sam. Everybody should know that off the top of their head. Nixon took us off the gold standard, and that's the most significant thing that ever happened to commodity prices in the world. One of the most, at least, in our trading careers. But like looking at this, I'm still seeing like, hey, gold is the outperformer. But I'm not saying like, hey, you just want to own all gold in your portfolio and walk away forever. I am saying it's an asset that makes new highs similar to the S&P 500. You want to diversify your wealth into something like gold is something that's pretty good to do it in because people always would write that off and go, well, the S&P does so well. And then people who own gold, they would say, well, I'm only going to own it because if something happens to the S&P 500, I have gold. Really now it's saying something different, which is this has been a very solidly trending asset, protects your wealth. Not something that's going to make you rich, just like the S&P 500 isn't going to make you rich, but it's something to definitely diversify your wealth in. Definitely like the idea of the 60-40 portfolio getting a little bit more into gold. What do you think about that, Sam?
I'm so into it. Yeah. I think that's the new paradigm for
Mhm.
the foreseeable future. You want to pair your stocks with commodities. I mean, look at what happened back in 2022. Bonds and stocks got absolutely crushed, but you saw energy continue to rip higher. So, like, if you had that energy exposure, you didn't suffer nearly as much as the average investor that didn't have that commodity exposure.
Yes, and what's interesting during that time, there was a lot of portfolio ideas that came out. One of the ones that was most famous was Harry Brown. It was called the permanent portfolio. And he was the guy who basically was like, okay, instead of these stocks, bonds, or whatever the crap you guys all want to use, we're going to do something different. We're going to take 25% gold, 25% stocks, 25% international stocks, 25% bonds. And that was going to be his permanent portfolio that he could hold all time. And what's crazy about it is if you compare it to most of the other portfolios, it has compounded and had a better return than 60/40 portfolios over that period of time. It's been very stable. The drawdowns are very small because and here's the interesting thing, and I don't even know if he went through this reading his book. I don't remember him ever talking about it, but it's similar to how like someone like Ray Dalio thinks, where you have these four different things and they do well in different environments. Your stocks, even international, might be doing well in more of a risk on environment, and you might have one leading or one not leading. Then bonds are going to do well in that deflationary environment where, the whole world's gone to crap. You're basically getting out of everything and you got to run to some safe haven. That's bonds. And he likes short dated bonds over long dated. And then you get to the gold, and that's your hedge against monetary or monetary inflation. So if you're saying
Debasement.
debasement,
There
awesome.
you go.
Thank you. Trying to think of the word. I'm like, why am I saying disinflation? Debasement. There we go. Thanks, Sam. So monetary debasement. So you have that also in your portfolio. So it just would do well in different environments. So I think it's, just highlighting the fact that like if you own a retirement portfolio, which most people do, you want to diversify it into different things, just like a little bit of gold, even owning a little bit of bonds. Like I'm not a fan of bonds at the moment, but short dated bonds and retirement portfolio is not a bad way to go right now because you're making a nice yield. Okay, let's get off the boring stuff. Sorry, guys.
Wavy says bullion over notes and debt. I like that a lot. That's where my head is at.
Wavy knows all.
Wavy is awesome.
Yeah.
So next chart here, Jason, you brought along this Gold Rush Classic chart. So this is bonds relative to commodities, stocks relative to commodities, and gold relative to commodities. So I guess the question I have here, Jason, is this blue line, the bonds relative to commodities, going to catch up, or are the other lines going to catch down to the blue line? So that would mean commodities outperforming stocks and gold.
Well, it goes back to what we were talking about earlier, which is if you go to like the sector of let's say gold miners, and you're like, okay, I want to get into the things that are kind of lagging in these new areas that are like small cap. I mean, really like juniors, explorers, and so on. And so you want to kind of go down the cap scale and find those things. That makes sense. You're in a sector that's very bullish. It's not exactly my strategy, but it's possible you can make some money that way for sure. But if you start doing it across asset classes, that's when you run into issues. Bonds aren't telling me anything yet that's good. Looking at it compared to commodities, I mean, the commodities ETF that I'm using in here, index that I'm using in here, is very tied to energy. So, like, you're telling me that against bonds, against mainly energy, looks that bad still, and I want to own bonds. That doesn't make sense to me. So I would stay long, looking at especially the areas of stocks, cyclical stocks look great. You're looking at these metals and mining that looks great. Gold's at a new high relative to the NYSE, which is pretty phenomenal. So seeing that the gold line on the right corner of your chart, that's really holding up there. So I'm just saying like the way the market looks, if you look at the intermarket analysis, is telling us to still stay in the gold, still stay in gold miners, keep moving into these different areas of the commodities market. Don't, we're not ready to just jump into energy yet fully, but these other areas are looking good. Sam's outlining some great trades in the lithium miners as well. I mean, there's a lot of areas out there that look phenomenal that a lot of people just aren't paying attention to yet because they're waiting on energy. Energy's got to be the only one that can be inflationary, I guess. Everybody eats oil, they drink oil.
I don't know who's eating oil,
I
but
mean, I guess everybody does because it's the only commodity anybody pays attention to.
it's true. And I think you were using this DBC, is that right, in your last
Yep.
chart? I mean,
Or
look at this chart, guys. So this is what Jason was referring to, the energy heavy Invesco Commodity Index Tracking ETF. That's DBC. And I have my long-term momentum indicator here in the lower pane. And as you can see, for years, it's had a bearish signal. It has not been in a buy signal regime with the monthly PPO since early 2022, but now you're seeing that PPO crossover for the first time in years, just as soon as the price is breaking above this multi-year downtrend line. This chart doesn't look bearish to me, Jason. I think this speaks to a potential rally in commodities and specifically energy, like we've been talking about so much.
Yes, and I think that monthly PPO is a great signal, especially because like if you just look at the crosses, like it really like right before energy took off in 2020 in November, it gives you a buy signal.
Totally.
Um,
It's super slow. You don't get many false readings with it.
yes, and that's good. That's a part of the reason why you want to use these long-term indicators. You know, I'm more of a long-term trader. Everything in my models are always very long-term. The reason is you get a lot less false signals. You can really ride these trends. Yes, if you're sized big, it's frustrating. It's hard. Those pullbacks seem like the end of the world. But if you're sized properly, it doesn't really matter. And then you're able to catch these, 100%, 200%, 10x moves that you're really looking for in some of these names, especially in the commodity space. Like these things can move and they can move very quickly. So when this thing crosses over, I'm sure Sam will update all of us and keep me on that list as well, Sam. If it happens, just ping me immediately. This is crossing over.
Uh, Jason, a question from Jonathan in the chat here. He
Mhm.
asked if this, let me pull it up here, this stocks and rocks chart,
Mhm.
does the S&P reinvest its dividends in this chart? Is it a total
Yes.
return or is this
Yes,
just
total
absolute?
return. Yep,
Okay.
that's total return. Yep.
Wow.
Yep.
Shout out to rocks. All they
Yep.
do is win. Speaking of rocks,
And
Jason,
once again, I'm not saying don't have stocks in your long-term portfolio or anything like that. I'm just saying like gold is pretty sweet too, and a lot of people like to hate on it. And it's like you could go back to when we came off of the gold standard and see now that gold has been the outperformer.
it's
But
just people like to think they're smart, Jason. I think is a big part of it. You know, people can do their big fancy discounted cash flow models on the stock and say, "Oh, it's going to give me a 10% return stream over the next 2 decades, and I can plot out what this is going to return me exactly to the very penny." But like, you can't do that with some shiny rocks, and sometimes you just have to keep it simple, stupid, and buy the rocks. And who knows why these rocks have done so well, Jason? There's a ton of factors you could point to. Monetary debasement being a big one, but it is what it is. We just follow the price. I don't know everything. I don't know every fundamental factor in the market, but the price tells me all I need to know, and the price is going up, and it's outperforming stocks. Like,
yes.
what more do you need to know?
Yes, that's all that matters at the end of the day is we know the price is moving, and people will even the people who think they're smart and fundamental in the commodity space go, well, let's look at supply and demand numbers for gold. Like there is no reason to look at supply numbers for gold ever. There's so much of it. There's a lot out there. Like, yes, granted, like more is coming in day to day and so on. If you're valuing a miner, go for it. But the actual gold price, it's really psychology more than anything. And price action is the only thing that's going to show you the psychology of the traders as opposed to trying to understand the fundamentals, which don't tell you where the price is going to go.
If you have a crystal ball, that would be helpful too,
Crystal
Jason.
balls are great. Yes.
We have Jonathan in the chat again, says he's up 78% this year thanks to precious metals. Hell
Nice.
yeah, Jonathan. That's what I'm
Killer.
talking about. Keep crushing it. That's awesome. I'm happy to hear that. Um, Hopefully, we've added value to your process with these Gold Rush videos. Jason, we got to talk about silver because it's poised to close this quarter at a new all-time high. It's continuing to scream higher towards this all-time high level. from 1980 and 2011 at 49. You could round it up to 50. Doesn't really matter, but that that level is very important, and I think we're going to test it before the end of 2025 and potentially see a breakout in 2026 to new all-time highs in silver. So, do you think I'm crazy? Do you think that's going to happen? Because I'm looking at the daily chart, and you've had this big move over the last month. You've gone from 36 to 42 in a very short amount of time, and look at how it's consolidating, how it's correcting that huge move in such a short amount of time. It's gone straight sideways, Jason, in a textbook bullish continuation pattern that I think is going to lead silver to $50 before the end of the year.
Oh yeah, I agree. I can't deny, like, one, it's in an uptrend. You're never going to hear me get on here with something in an uptrend and be like, I know where it's going to stop, and it's going to stop today. Never going to happen. Because the price rules. And so as long as the price is ruling, I'm going to think this thing's going to continue to go up. And it makes sense. And the intermarket always is the thing that's like, okay, the price might tell me something, but am I seeing any warnings in the intermarket data? Am I seeing the silver miners start to fall off? Am I seeing the junior miners start to fall off? How does GDX look? How does silver look compared to gold and so on? Like, they all look great. That means stay long. That's all. Like, Sam and we got so many questions when gold was consolidating about the end of the precious metals bull market as we knew it. And we're sitting here pointing to every week the miners are leading the way. The miners continue to make new highs. We want to stay long that sector. We're seeing risk on in that sector. So to me, I'm just very bullish on silver. I think it can hit 50. I think it could, if it really breaks 50 decisively, I think it's probably going to 100.
I couldn't agree more. We have Robert in the chat saying, for your information, GDX is going to be rebalanced, most likely 19th of September, but latest 30th of September. Some stocks going to zero weighting. Some new names will be included. So I've heard a lot of chatter about this recently, Jason.
Mm-hmm.
Is this something we should care about? I mean, I've seen the list of what's expected at this rebalancing, and I can't say I fully agree with all of Van Eck's decisions with this rebalancing, but it is what it is. I can't do anything about it. Do you think that's going to stop this chart from breaking out to new all-time highs, which it is doing right here, right now, today, breaking above the 67 level and heading towards that $100 that the Fibonacci analysis suggests? Do you think a rebalancing matters, or is it just a, because for me, I can pull up basically any precious metals chart and the line is going up, and it's going up a lot. So, you know, uh, maybe the GDX won't own the best ones, but I feel like it's not that big of a deal.
It's so there's two ways of looking at it. One way is as traders, when things like this happen, we like to really like overthink it. And we go, okay, well, it's going to be this and this is going to happen and so on and so forth. And once again, like, and he said for our information, we already have been aware of this. We know this is going on. We would
Totally.
update
It's
you
not a
guys and tell you,
secret.
yeah, we would update you guys and tell you get the hell out of these positions if we thought it was going to crash.
Yeah.
But the one, if you want to do something that's going to make you feel better about it, because in the end of the day, that's kind of just what it is. Sometimes some traders want to feel better about things. So if you want to feel better about it, you could get into the individual names themselves, find ones that are outside of the rebalancing, and just trade those for now. For me, I'm going to still be long the GDX. I don't think this, if it does anything, I think it would just move it sideways for a little while investors are, before this happens, I would assume it goes more sideways before this happens. That hasn't been happening yet. But let's say it starts to go sideways a little bit before this actually happens. I would say that's normal. So,
And probably well deserved if you're looking at the chart here. This one's
no,
gone from
Sam, things should
40
go
to
up
70
forever.
in just a few months. I mean, it's been incredible, Jason. So yeah, I think those are some Good comments you made there.
It's in
We
my
have,
portfolio though, Sam, so I want it to go
yeah,
up every day.
yeah, because that's reasonable to expect, right?
Manage your own expectations is the name of the game.
Totally. We have Frey Lee in the chat. Says that Bart, I think he's referring to James Bartoloni
Mhm.
of bartscharts.com, who's now a contributor on Stock Market Media. So shout out to Bart. He's putting out great content. I believe
Yeah, I like Bart stuff.
he goes live every Sunday at, I believe it's 6 o'clock Eastern time. You can check the Stock Market TV website for details on his program. But he said that silver was going to correct at $42. And Frey Lee, I would just like to point out that that's exactly what's happening. Bart nailed it. Silver is correcting at $42. But my point was that silver's correcting straight sideways. And that's what happens in the strongest uptrends. The price um, or the commodity doesn't correct through price, it corrects through time.
Well
And
said.
that's exactly what's happening here. So that's part of my bullish thesis is the way silver is correcting, and it's correcting as bullishly as it could possibly correct. So
Go to that long-term chart just before this one of silver.
yeah,
So if we're looking at silver, like, and we're going, okay, it's going to stop here at 42 and it's going to do this, it's like, do you want to be a part of the choppiness of silver, or do you want to really like make some money here? Like it's the same as like the gold miners. Like if you're trading the gold miners, it's the same thing you want to do, which is really be long and stay in those gold miners for a long period of time. However you do it, small positions, wide trailing stops. That's what I like to do. So I think when you look at it, and a lot of people are going like, it could stop here. Yeah, I could name a bunch of levels. Sam, we highlight levels every week for Gold Rush members. But at the end of the day, like we keep talking about it, there's no fever like gold fever, which means you want to be able to ride these trends for the long run. If you're really trying to take advantage of this cycle, if you're trying to trade them and you're a short-term trader, disregard what I'm saying. But if you're long-term, like you got to figure out a way to trend follow this thing because this is one of the biggest patterns I will probably ever see in my career. For sure. Like we've seen some of the other commodities. Sam highlighted a couple good ones, whether it was coffee, cocoa, and so on. But this one here, silver, and everybody's seen this chart and it's finally actually happening. That could really be massive for this whole sector. And the to just end on the one thing that's I say a lot, which is there's no fever like gold fever from Richard Russell, and that's the truth.
totally. And for all you gamers at home, go ahead and pull up the cocoa and the coffee charts and orange juice, add orange juice to the list. You can add lumber, the long-term lumber chart. A lot of these commodities peaked near 1980 and went nowhere for decades. And then a lot of the softs broke out a few years ago, and they absolutely skyrocketed out of these patterns. So, like, if you think it's extended, go look at those charts and look at how extended they were when they broke out. It didn't matter; it just kept on going. That's how these commodities are. Like when demand is greater than supply, the line goes up, and it doesn't really matter what your discounted cash flow model says or whatever. There's more demand than supply, and that's all that matters. And until that changes, until we see the price stop going up, I'm going to continue betting that the line will go up. So, yeah, I think this is a good note to end on. Potentially new all-time highs in silver. So, gold's crazy cousin, if you will. So, shout out silver.
Well, let's add do you have the short interest chart?
I do have the short interest chart. Yeah.
Let's end on
So,
that because we
yeah,
keep
for
talking
all
about
you
the hated
GDX
rally.
bears,
Yeah.
you're not alone. GDX has the highest short interest since 2018. And thank you very much, short sellers. You are putting money directly into my pocket. So, thank you from the bottom of my heart. I could not be doing this without you. I mean, look at this parabolic uptrend, Jason. What are these short sellers thinking? How could you possibly be short a chart like this?
Well, I'm excited to see us move into Robinhood is now starting to open up to short selling, which will be great. Um,
Great.
yeah,
That sounds like it's going to end well.
that it's exciting for us, because we can see the short interest, we can position well in these things, and it's going to create, bigger squeezes. Now, once again, I have no idea what anybody's seeing, but I know that what are we seeing, and what we're seeing is the fact that this rally is hated. People don't like it. People don't want to be long it. To me, I'm not seeing hedge funds just jump into it. So between all of that, I want to stay long this sector. Like that's the biggest thing about today. We want to stay long the gold mining sector. We want to continue to be in silver. We want to continue to be in the smaller names down the cap scale, juniors, explorers. And we really want to ride this trend and see where it ends up because it's still hated. People don't like it. People don't want to be long it. People want to just avoid it. So stay long. The gold miners is all I'm saying today. Over 100%, and everybody's probably like, that's the end of it. And it's just
Let's
not.
all get short.
Yeah, let's all get short. If you want to do it, it's a free country. Go ahead and short this thing, but shorting runaway freight trains isn't a good idea. Yes, everything will pull back and be in a bear market at some point. That's true. But that doesn't mean like when it's going straight up. I mean, that's the thing we all do as we start trading, which is try to short things that are going up, try to go long things that are going down. We think about it like we're at a grocery store. It's just not the way trading works. Trading is much different. It's based on human psychology and greed and fear. And right now, we're seeing a lot of fear in this market while the price is going up, which is telling me it's still got a lot of legs to go.
Totally, Jason. And at All Star Charts Gold Rush, we will be trading these markets every single week. We put out a precious metals note, a commodities note, currencies, bonds. We're covering everything in fixed income commodities and currencies. And a lot of our members are crushing it and loving what we're doing. So if you want to join All Star Charts Gold Rush, you can click the link in the YouTube description to learn more. It's only $12.99 a year, and we have a 30-day money-back guarantee, so it's completely risk-free. You might as well come and hang out with us for 30 days. Um, so yeah, that's it for today. We thank you all for being here. Shout out to Jonathan, Frey Lee, Wavy, Robert. We've got Flush in the chat today. Really appreciate all of you being here today and making this such a fun show for Jason and I. It's not just us two getting up here and rambling for half an hour. You guys really make it interactive, and we appreciate that very much. I won't see you next week, actually. Jason will have a special guest here on Gold Rush Live. Same time, same place next week. I will be on a flight to Athens, Greece. So next time you guys see me, I will be coming live to you from there. So I'm looking forward to getting out of the U.S. for a little bit and exploring the world. So yeah,
Kansas boys seeing it all. Love
that's
it.
right. That's
Love
right.
it.
Yes. All right, everybody. We'll talk to you later. Adios.
Later, guys.